Well, students, you're probably just rejoicing, happy to hear that this is our final lecture, lecture number 14. And let me share and we get right over. Last week we ended talking about letters of credit. What is we talked about time letters of credit, site letters of credit. There's a third we didn't have time to get to, pun not intended, that's called a transferable letter of credit. I'll let you watch that video on your own. But essentially, transferable will let the person to whom it's payable give it to someone else. So it's almost like a check that if you sign it, you can give it on to somebody else. You'll see the diagram, same thing we've seen in letters of credit from last week. Transferable, same thing. You put up the money owed, there's documentary evidence, etc. But the key here is that that letter of credit can be transferred to someone other than the seller in our examples. Bank reviews the documents. If it's perfect, they send the money, but send the money to whom you have now designated. There's another type of letter of credit called the standby letter of credit. And you can do this. There's a couple of very primary ways this is used. So I'm not necessarily using this to guarantee payment from my customer, quite the opposite. My customer, for example, if I am bidding on a multi-million dollar project, they don't want to just receive and accept bids from companies that are fly by night. They want someone not only that's qualified to build this big thing. I mean, they might be receiving oil and gas equipment to put in a giant field or equipment to put in a manufacturing plant, and they have to have it. So, one thing that a customers will do from time to time on large products will require you to use the seller, provide a bid bond. And that essentially means if I am awarded the bid, my bank guarantees that I will perform or manufacture. And if I don't, the bank pays you usually 5 to 10% of the value of the total project that you agreed on. So that's a good way to force me as a seller to be on it. Another way you might use a standby letter of credit is if I give my customer a guarantee, a warranty, this is good for 2 years. After I send it to you, it's good for 2 years. Well, they might require me to have my bank issue, as the seller, my bank issue a letter of credit that goes to the customer's bank, and it basically says during the term of the guarantee, so you customer pay me for 90%, but either pay me 90% and keep 10, as that'll happen from time to time, or pay me 100%, but I give you a letter of credit that if as the seller, my product doesn't work as guaranteed or warranted during the guarantee period, then you have a letter of credit that you can get money from my bank. So that's called a standby. It's just sitting there if needed. We already talked about site, letter of credit, time letter of credit, so we don't need to do that. It's similar to the documentary drafts. If it's a site letter of credit, gosh dang, the bank is going to pay as soon as they receive and approve all the documents, shipping documents, invoice, etc., that I, as the seller, have sent. On a deferred payment, they will do the same thing, but they may pay me 30, 60, 90 days later. That is, I'm giving my customer uh, payment terms. What's it going to cost? Well, your bank might charge you anywhere from 0.75 to 3% of the total value. So if I'm selling $1 million transaction, a letter of credit will probably be in the amount of 0.75 to 3% of the $1 million transaction. How do banks and customers, if I'm working with a bank on letters of credit, et cetera, et cetera. What's the law? What are the standards? What if I'm in an argument with my bank or with my customer's bank about how these financial instruments are interpreted, handled? Well, there's a nice set of not really regulations, but understood and agreed practices. Uh, the first on documentary credits or draft is this UCP. Okay. On and letters of credit, there will also be a way applicable regulations for those as well. Now, let's jump to another way for you to receive money, not just receiving funds from a bank through a documentary draft, through a letter of credit, but some companies will actually do counter trade. Now, let's say, for example, I'm doing business. I want to sell a huge computer into a country that doesn't have a lot of currency available to send to me, but they have raw materials that I need in my computers or my electric cars. Well, I can actually do a counter trade where I am selling you the computers, and by payment, you are selling me these rare earth materials or something else. And that's simply known as counter trade. And that's used from time to time by international companies with customers. Task 4.5, what are the T's and C's of sale? Resources for payment. We talked about consignment. Okay. That's a consignment is where I'm going to put uh, product. We talked about that last week. I'm going to put product. I'm Toyota, and I put a bunch of Toyota cars into the dealer. The dealer doesn't pay for them until they're sold. So that's another way of receiving the money and when you get it. Now, let's jump back on. Obviously, banks are going to help us with financial. One thing to be important is if, oh, there's the international trade. I will change it after this. That's the letters, documentary credits, then letter of credit, etc. Those are the rules to follow. I apologize that. Um, Now, thank you for letting me improve it as we go. Here's the rules, uniform rules. They're issued by the International Chamber of Commerce. That's not a government body, but it is a body that will come up with rules that a lot of companies internationally will agree to abide by. All right. Now, financial plan. If you are the international department, then obviously you're not just going to have uh, gee, these are the products, this is technical, this is where we're going to go. Part of your planning, your business plan for this, for international is obviously going to be the financial. You're going to have to set up payment terms. When and how are we going to receive payment from customers? When you're using, for example, your bank to utilize SWIFT to issue or receive letters of credit, make sure your bank is big enough that they have an international department. Some small domestic banks, wherever country are, don't have this ability. So you need to make sure your bank is sophisticated enough to be able to do these international transactions. Securitization, we've talked about this. I might actually not only receive insurance to get paid, but also I can get loans sometimes from some of these agencies. I'm using US agencies as examples in this lecture. SBA, your CEO says, well, we don't have the money to, you know, to do all our financing. You say that's okay. In the SBA, I can get loans through the SBA. You see the amounts of loans less than 5 million. Then there's an export working capital program. I won't go into all their requirements, but the EWCP, you can get money up to $5 million to finance while you are manufacturing. In other words, you don't have to have the capital to manufacture. You can actually get a loan for it. And while you're waiting to get paid, just contact your small business administration. XM also has working capitals and they all sizes. It's not the $5 million credit limit. So you can also find loans and financing for you and sometimes also for your customer. Here it is, XM Bank's financing for your international buyers program. So you can actually go to your buyer and say, boy, I know this is a multi-million dollar deal, but not only can I sell you the goods at a competitive price, I can find you financing. So it really helps you competitively. Why do we have it? Well, Japan is one example that for years, uh, Keidetsu, that's the Japanese word, but banks and manufacturing companies and distributors, et cetera, had informal alliances. It would be unlawful in the US if they weren't all commonly owned as an antitrust, but in Japan it was fine. And basically they were getting so many sales because they would go to customers and say, I'm not just selling you the product, I'm getting you the financing as well. So the US developed various financing arms, whatever country from which you're watching this, your government probably also does have these programs available. Credit insurance, we've talked about that. You can get, if you're worried about non-payment, you can get credit insurance to ensure you get reimbursed in case there's a default by your customer. OPIC also has financing. Now with OPIC, they like to, it's more medium and long-term financing, but they also like to assist what we call emerging markets. I think third world countries is a little denigrating, but countries that are emerging, they will really help out on put in a lot of times infrastructure, telecom, housing, etc. So if you're involved in that, you can actually go to OPIC. Now, one caveat, one footnote, when you go to OPIC, don't tell your CEO, hey, I'm going to go buy a factory in that country, foreign country, so I'm going to get some financing. No, OPIC does not provide money to, nor does SBA for just letting you go buy another company. All right, agriculture, they do similar things. Underwrite credit to make sure you get paid if you're in the agriculture area. Let's jump to the next task, our final task, and that is short-term financing as opposed to medium to long-term financing, which we've just been talking about. Short-term, most of your businesses will have a line of credit established with their own corporate bank. And some banks will actually not only do the operating line of credit, but you may be able to apply for even more line of credit. Say, for example, you're doing a $10 million project that's outside your normal operations. Many banks will actually give you an additional loan for that operating capital until you receive payment. But of course, you need to put the interest and fees and whatnot, calculate that into the selling price so you recoup that from your customer ultimately. We've talked about factoring. You can take your accounts receivable and go to either a bank or a factoring company and they will sell you up front and they'll take a hefty portion of it. That's really usually for companies that are real serious cash flow problems. They might be on the edge of bankruptcy and they just have to have money to keep their organization running. You can actually also factor a documentary draft, documentary collection. Remember that. I give you a bill of lading. It's a key concept to remember, bill of exchange. Finally, and I've got only a few slides, is some customers will prefer financing your product as opposed to purchasing it outright. Why? Well, some customers just don't have the funds to outright buy it. If I'm not mistaken, many aircraft uh, purchasers will lease as opposed to purchase outright. Then they don't have to depreciate this on their taxes. Every year, the lease payment that they make to the manufacturer comes right off as a business expense and saves them on taxes, theoretically. Um, so XM can help you on leasing, but basically it's like buying, but you're just leasing it and then they get it at the end of the lease. And it depends on the leasing company that you use will have two types of lease. One will be they just lease it, but then it's not theirs at the end of the term. It comes back to you. Another type of lease is called what was it? Purchase money interest lease. I'm trying to remember. At the end, they actually get it. Either if you've leased a car, for example, you'll pay so much in the lease payments, but then at the end, you have the option of either returning the car to the dealership or you can pay an extra amount to keep the car. So you can do the same thing internationally with lease payments. Simple diagram. It's kind of insulting to your intelligence, frankly. But just a reminder that XM is also a um, organization, government or entity that will actually assist you in leasing, not just sales, not just guaranteeing payment, not just providing uh, capital for operations. Well, my friends, I'm sure that breaks your heart, but that is the end of our lecture. And it's been a pleasure speaking to you this semester.